everyone, to the Trust the Plan podcast. I am Jim, and I am again here with our special guest of the day, Evan Chopp.
Hey, thanks for having me again, right after the other episode, but
Hey,
you won't know that.
Don't give away our secrets.
Oh, sorry. They might think I'm dressed. I try to wear the same thing every day.
They just
though,
think we wear the same clothes all the time.
Yeah, there you go.
Well, Evan, we appreciate last week's podcast where you continue to enlighten us on credit cards and ways to maximize travel points and benefits and all that kind of stuff. So we appreciate that, and obviously you're very passionate about that. But another thing that you're passionate about is personal finance. So you've been you're willing to sit down with us and talk a little bit about your journey and where you've been and goals you've set and things like that. And just thought we'd talk about that.
Yeah, I'd love to. Bridging off the travel and how we got there, I had personal finance became the first hack for me. And how can you learn and understand and get all the concepts around personal finance? And travel kind of came out of that. I'm like, I don't want to spend all of my money just on travel, but I really appreciated the experience of travel. So it kind of came from that a little bit. My personal finance led into the travel. So the podcasts I've done with you have started with travel, but really the whole journey for me in getting to travel hacks was started with personal finance and my desire to want to continue to do that, but not be able to have to take from my financial portfolio and things like that.
Yeah, I could see that. You making that jump to working so hard to try to save money to then having to spend it is sometimes painful. So the travel, the credit card points and the travel can be a good way to maximize that for sure.
Right.
So you talked about, talk about the time. Like, when did you start getting interested in this? When did you start thinking, I need to start planning out my future and start doing things that will help me in the long run?
Yeah, there's some really interesting moments. I think my dad taught me a lot of just about savings. My dad always saved. We were not extravagant as a family. We really had a saving culture, and he taught me early on. I started this part of my personal story. I have now been with Best Buy since 2001. I started there when I was 19 years old, and I've been there for 24 years. So when I started there part-time, they had different programs like 401k. They had different programs like employee stock purchase, different things like that, where it taught me my first elements of saving and having the discipline to save your money and put it into these different programs to let the money start to work for you. So my dad really encouraged me to invest in both of those things. One being the 401k, and one we had a super lucrative at that time employee stock purchase plan that I got educated on. And those were two of my first initial investments when I got into the workplace. There is a great story, though. When I had a job at 14, I worked at a restaurant and making hamburgers and washing dishes and all of that kind of stuff. And I decided to open a savings account or an investment account when I was 16. I remember riding my bike to the bank, DFCU Financial. I rode my bike there, and I deposited money, and I said I wanted to invest it in an account. And this guy probably was laughing at me at times. But I invested $50 a month was what was going to happen. It would come from my checking and go into this account. And I started that when I was 16. And that account ballpark, it still pulls out $50 a month on it. And that account alone now is worth, I think it's last I checked, $246,000. And it's just been $50 every month in the market, compounding with interest. And I've principally never stopped that $50 recurring investment. So that's been happening for now 27 years. There's been $50 every month. From when I was 16.
It helps start your journey, right? It helps you get the ball rolling.
Yeah, so that's my initial moment probably. That probably came from my dad. And then from the workforce, it was the 401k and employee stock purchase plan.
Which I think is great, because a lot of times young people who just enter the workforce, their first thought is, I finally got money. I'm going to go out to eat again. I'm going to get a better car. I'm going to do all these things. So how did you balance those temptations with, your dad helping you see that you need to start putting this money to work for you?
Yeah, a couple things. I think the first one, I will say this, and not everybody has this blessing in the workforce, but when you can get discounts on things, it's great. So the employee stock program that we had at that point would give you a discount, and then you'd be able to sell it right away. I didn't hold on to it. I just took it and flipped it and made the percentage on it right away. That program doesn't exist anymore. I wish it did. So I'm like, oh my gosh, I invested my money for 6 months and I saw it just grow with this program. But then the other thing is just you watch the other accounts, and I watched my 401k start to accumulate, not just because of like the massive growth, it was because of all the things of the tax savings that you get on a 401k, then the consistent investment, you're always investing. So it's recurring biweekly. And when you do something biweekly, you get the tax savings, let alone you invest it in the market and it grows. Even over a year or 2 year period of time, it was like, oh, I got $5,000. Oh, I got $10,000. Oh, I got $20,000. And as a 20-year-old kid to have $20,000 saved in my 401k, like it was like, okay, this is kind of cool. Yeah. And you started to get that like understanding of when you put money, you have discipline, and then you give it time, how that can incrementally have a massive impact with like compound interest.
Yeah, and I think you hit on something that we talk to people a lot about as well, but automating, right? If every time you got paid, you had to make the decision of, am I going to go out to lunch this week or am I going to save this money? It's a hard decision, right? But if you automate it and you don't have to think about it and it just continually goes into, goes to work for you in investments, that decision's a lot easier.
I think this is good, and I know it's so well I can just rattle it all off. My automation of savings is by far one of the biggest things that's put me in the position I am today. So I talked about the $50 piece that I automated. That's been since I was 16. We talked about goal setting. For whatever reason, I did get in this goal setting piece of paying off my mortgage. There's a whole bunch of different things on there depending on your interest rate. So this isn't whether to pay off your mortgage advice or not. But I did pay off my mortgage. At that period of time, it was a $1,200 monthly payment. I didn't take that monthly $1,200 and then spend it on other stuff or have free capital. What I did is I automated that $1,200 to go into the market. So ever since I paid off my mortgage, it's been, 14, 15 years ago, that $1,200 still comes out every month. It just, instead of going to paying my principal and interest on my house, it's going to me and I'm paying myself, and it's just been growing in interest over the time. We eliminated a car payment, and that car payment then we put towards automation. So the same $400 car payment that we were making is going into different accounts. Every time I get a raise, I pay myself a portion of it, and then I pay myself for the future another portion of it. I've automated every part of my savings journey. 401ks max automated, HSAs max automated, IRA is not actually automated. I've got to do a backdoor Roth for different reasons, so that's not automated, and I time that a little bit. But anything I can automate, I do.
Yeah, I think that's really smart. We see it over and over again. That's the plans that are most successful are the ones that you put in place without having to think about it.
100%. I think the other time I got my annual appraisal, I got about, told Jay, hey Jim, how do I just add additional $100 to my auto investment here? He's like, oh yeah, we can do it, no problem. And so it's $100, but it's $100 every month that now is being put towards my future that, I didn't lifestyle creep. I didn't understand, any of that stuff.
You just brought up a term I was going to use. I mean, that's something that we talk a lot about, lifestyle creep. You make more, you find a way to spend more. So what those habits that you've created do is help you avoid lifestyle creep, right? If you don't all of a sudden free up a mortgage payment and now have that money to spend on something else, because instead you continue to invest it, it keeps you living within that same range of income and expense.
Yeah, again, everybody's got to have their own mentality on this. Like, I just got to a place where I wanted to be in a place of financial independence so I could make choices about how I wanted to spend my time in my life. I'm so fortunate. I just have an incredible job, and I still love going to work every day. And but if I didn't feel that way, I wouldn't technically have to do that, and I wouldn't have to feel strained or pressured to what am I going to do about my financials if I have to step away from my job? And that's just such a freeing thing to have. But I couldn't have got there with the discipline. I had to see that come out. So as I've talked about others, we do spend money on experientials, and if we're a place and it's an experience that I think I'll remember, it could be a core memory. That's one thing, but experiential to me has never been a house or a car or things like that. It just hasn't. We looked at houses when my income started to grow. We looked at houses for a long period of time. But I bought my house 18 or 19 years ago. There's just 3 of us in the family. It's fine for us. Yeah. And every time we went to look for different houses, it's like, is the third car garage going to give us more joy? I don't know. We're not even home that much. Is the mudroom being a little bit? Mudroom in our house is way too small. Eventually, I might need to invest in that one. That one could be something. But those things came up, and again, blessing that my wife and I are very aligned on this. We got to the point and it's just like, wow, our house is paid off. We're not there very often, and we can just keep saving money.
Yeah, gives you the opportunity to enjoy experiences, right?
100%.
Rather than stuff. People get trapped into paying for stuff all the time.
Yep.
This gives you the opportunity to do things.
Yeah, again, I'll just say this. We've alluded to it a little bit. The biggest thing that I think people don't understand is compound interest. Mm-hmm. And compound interest can either be working against you or it can be working for you. Mm-hmm. And again, as I throw out all my disclaimers in the travel podcast, credit card debt specifically and high interest debt just totally erodes any ability you have to build a long-term portfolio. So high interest debt is like the worst thing somebody could like be holding on to and handing, because it's just going to kill your long-term portfolio. Yeah. Whereas flip side, when you get dollars of bills working for you, invested in the market, and then they continue to grow and grow and grow, you eventually get this exponential like trajectory on your portfolio, and like, oh my gosh, how did that happen? How did my money double in the past 7 years? It went from this in 7 years. Oh my gosh, what's going to happen in the next? And then it tripled, then it quadrupled, and then it's like, oh my gosh, now I am financially independent, and I did not think that this was actually a goal I could attain, but I did.
Yeah, I like to tell people, time is compounding, right? Time is either your best friend or your worst enemy. Like, it's either there, it's going to help you be successful if you use it to your advantage, or you're going to use it to run out of time, and it's going to, snowball the other way on you.
Yeah, for whatever reason, I use this with, I try to teach this concept at work a lot, especially to younger kids, and I keep alluding to this like army of dollar bills type thing. Mm-hmm. And I think about when you put in $10, like, to me, that's like 10 people now working for me and trying to make money for me if I invested in the market. Mm-hmm. And now I've got $1,000 bills. That's 1,000 people like working for me. Like, every time you put money into the system, it's somebody working for you. Mm-hmm. You just don't know it. It's behind the scenes, but they are working for you and they're making money for you. So how can you get more dollar bills, more people that are working behind you and for you to help you grow your portfolio?
That's a good visual. I like that. So you're obviously a disciplined guy. We talked about that a little bit, and you are big on goal setting. You kind of mentioned that. How did setting goals come into play with all of this? And at what point did you start putting goals into place?
Yeah, it's another great question. It ties to work. I don't know where it became, but I started to do pretty well in my career. I had been saving since I was 19, so I started to be able to I started at a portfolio. And for whatever reason, I don't know the exact age or time, but it was like mid 20s to late 20s. I decided just in one of my speeches to be like, yeah, and my goal is to retire by I'm 40. When I said that, I don't actually think I knew what I meant. I just kind of like said it and goal set it. But then lo and behold, like, my portfolio kept on growing. So I kept saying it. People would ask me questions after about what you do. And I like to help people. So I would like teach them stuff. And then lo and behold, it kind of came to be part of like my brand. Mm-hmm. Is that I was known as the guy who was saving and trying to retire by the time he was 40. Yeah. And so then I like kind of held myself accountable to him. Like, I'm telling all these people I better actually like hit my goal. I've told everybody this thing, but this isn't a goal setting course necessarily, but I do think when you verbalize goals, and the more you verbalize goals, even if you tell people you're trying to lose weight, if you just tell one person or keep it a secret, the probability of you attaining that goal, I think, is lower. The more you actually verbalize your goals, share it, talk about it with people, I think it helps hold you accountable to the right behaviors and principles to hit that goal. Because no goals just like happen overnight, unless, again, if we're going to wait on a lotto ticket, okay, that's not going to happen. Everything else actually takes discipline and time for you to hit your goals. In some cases, it can be 3 months. In some cases, it can be 25 years, 30 years, 40 years, but it takes discipline and time. And by verbalizing your goals, I think it helps to attain them.
Yeah, excellent. One other thing that I think is interesting about your situation is sometimes people, who are young like yourself when you started this and you've built up, some resources, maybe got lucky with a great stock pick or, got into something early, right? But I don't feel like that's your story, right? That's not your case. Why don't you talk a little bit about your investment philosophy?
Oh, yeah. I'm plain old Jane, man. No inheritance. I mean, again, let me be clear. My parents had a wonderful upbringing. We had no student debt. For my wife, Aura, I had no student debt. So I do want to say that we had very blessed in that fashion. In some ways, that is an inheritance, but neither of us got lump sums of money. Neither of us won the lotto. Nothing along those lines is part of our portfolio. And then really, I mean, we're very diversified, but it's exactly what they teach in the books. It's like basic S&P 500 index. It's certain percentage bond, low amount of bonds at my age, but it's really the market. I mean, if I had to put the most simplistic thing, we are invested in the market, and being invested in the market over the past 20, if you go all the way back to 16, for the past 27 years has been very lucrative to be invested in the market over the past 27 years. And then again, I think there's so many things on this, and this is just where none of us are fortune tellers, but there is an element of just like history. And if you just look at history, there's been so many ebbs and flows. Nobody's been able to exactly predict when it dips, when it rises. So like when it dips, I'm actually not angry because of my automated investments. I'm buying when it dips. Mm-hmm. So because of my auto investments, the stock market goes down, I'm buying and I'm getting it at a discount. And then history, not because I'm a fortune teller, not because you guys are, history tells me it's eventually going to go back up. So when dips actually occur, those become moments in time where I actually want to have some free cash flow. And then I just invest in the market when dips happen rather than like panicking and selling and freaking out, because I'm just basing it on history. Mm-hmm. And everything that's happened in the stock market over the past, 100 plus years.
Yeah. I just think that's a good takeaway. You don't have to be, you weren't the smartest investor that got lucky because you worked at Best Buy and knew this company was going to go big. It's just doing the right things over long periods of time, and that's what breeds success.
I have like a couple individual stocks in my portfolio, and that was just for fun. It's like, all right, let's buy $5,000 of this. I think it'd be fun.
Right.
Like, I mean, that's really what, those are the only like individual stocks I have. Most is just, low ETF funds, mutual funds, and then index funds. I mean, that's pretty much, boring portfolio for some, but it's done pretty well for me.
For sure. So we'll give you the last word. Any, our young viewers who are tuned in and listening to us, what would you tell them? I know you like to counsel a lot of young people, a lot of the young guys that come into Best Buy and start. What kind of takeaways do you think they should focus on?
Yeah, I'll end with my kind of piece. But the first thing I think, and anything I teach, it's just like education. I think we get so hung up on the broader form of education and like this degree and that degree, and those are all super important. Don't get me wrong, but like money is super important. It impacts. If you want to be charitable, my money situation has helped me be more charitable and things of that nature. Whatever you want to do in life, like money will help you. And it doesn't mean you have to make a lot of it. Just be smart with it. And so much of what I have is just my education. We didn't get into HSA or stuff like that. I was uneducated about the health savings account. I got educated, and now like there's $100,000 in my HSA that, for those that know about it, it's like a triple tax savings thing. And I just wasn't educated about it. There actually should be more in that. That was something I was behind in. And if I would have learned sooner, I would have been able to maximize it more. So just like anything, get educated on money. Like it'll help you unlock so many things. The reason why certain people, even like myself, grow their portfolios, I just become more educated, and then I'm doing the little things and that make a big difference in the long run. So the first is education. The second one is how can you get more money into the funnel? So like that in some cases means work hard and study, improve your job, and grow your actual income. But that also can mean I can put more money into the shovel, and feed into the system if I don't spend as much, if I save this, so on and so forth. There's also an element of like if I save it, then I can invest it. So money has to fuel the system. The second one to me is just discipline. There's so many different tactics I have on this. Like anytime I think about making a big purchase, I like usually sleep on it. Even this day when I could afford it, it doesn't matter. It's like, do I really need that? And I'll sleep on it. And then if I still think in the morning that I want it, then I'll just buy it. But in many cases, I'm like, I didn't need that. And that's even to this day. Like, I'm still like that. It's just a weird discipline tactic. But it was one early when I was so easy to swipe a credit card or buy something and not think about it. And then you realize you never used it. When you're making an expenditure, realize it's taking away from your long-term growth potential. It's taking away that army of dollar bills. Right. And is it really worth it? Is this going to give you the joy, satisfaction, improve your life in the manner that you're willing to take away dollar bills working for you to invest, to spend on this? And the last is just time. Like the more you do this in a consistent way, you put money into the funnel, you save and you grow your career, you stay disciplined to your principles, and then you just give it time and just kind of be consistent with that and give it time. Like you will be really, really astounded. You do not have to have a crazy top line number to still be a millionaire. You can just do things with money, discipline, and time, and you can get to that. Maybe I was able to get to it at a certain age, and you might be at this point and a little bit later. That's okay. You can still get there, and that's the whole point if you do these things with principles.
Yeah, I think that's great. I think Evan is such a good friend of the show because we think alike on so many topics. It's great to hear, him rather than, Nick or I or Preston out here saying these same kind of things. It's great to see a real world example of somebody who puts, really good, sound financial principles in place and has done well because of it. So thank you for joining us. Thank you for being, an open book to our listeners and all that you do to help young people and everyone else just get a really good start in life and make good decisions.
Yeah, no, thanks. It's an honor to be here. Again, I've heard these guys talks before. I listen to them. They're really giving a lot of great advice out to folks. So hopefully this is a great way as I talk about education to listen to the podcast, put on something and get educated about money. So thanks for having me and I really appreciate everybody.
Yeah. If you enjoy what Evan had to say and if you want to hear more information like that or want to have a second opinion with us here at Peak, feel free to go to the website, peakwm.com, and schedule with us online there. Thank you.